would say early stage funding, India as of today now, and it has grown tremendously over the last 10 years. If I can, when I started my investment career in VC firm, there were very few startups which were used to get funded. But now you can see a lot of startups getting funded, especially tech startups. And this is basically because of a few successes that have come out over a period of last 5 to 6 years. If you look at India, India has a large, huge entrepreneurial base. Unfortunately, the ratio between the fund available or the number of startup venture capital funds are few compared to the requirements. Nevertheless, I was just reading an article 2 days ago where somebody was mentioning that the number of tech-funded startups have grown from 100 to 200 in a year. I mean, that's a tremendous jump. Now, coming back, how do you attract, how do kind of a startup get funded? See, basically from a venture capital or private equity kind of a perspective, what we normally look forward is, the first is the idea, the business proposition that you're bringing to the table in terms of what are you talking about in terms of the product, the market, the services, what you're going to deliver to the end customer. Beyond that, what normally a venture capital or angel investor looks is a team. See, ultimately a business idea has to be converted into a actual business, and you need a team to implement that. You need to convert the business idea into a successful business proposition. For that, you need a team. And not just a team, you need to have a very cohesive team. And normally what I have found is, even if you have a team, there is lack of clarity in terms of the leadership within the team. You should have a team, but then there should be some leader to drive it. I mean, Dr. Chauhan was talking about Infosys. The success of Infosys is because you had a very clear-cut leader in the team who was driving the business. So we as a venture capital will also look for a good team, but beyond the team, we need a leader within the team who got the support of other team members. If it's a complementary team, nothing like it. Once you get into a kind of a discussion with the VC, you need to have a clarity of thought. When I say clarity of thought, it's basically what you are kind of communicating through a business plan. Like, what are you really achieving in the marketplace? Is there a real demand for such kind of a product and services? If there is a demand, what is the paying capacity of the end consumer, and what is the scalability of that business? I mean, these are the few things that they look at. I mean, it's like checkbox. You tick it. Once the VC or a private equity is comfortable with these aspects, I think then it's more of a kind of a trying to kind of sell your business plan to, it's much more easier for you to sell the business plan to your VC investor. That's for the startup. Now coming back, we have various,
Saji, if I may interject you on this, you raised 2-3 important points. I'm going to drill upon 1 or 2 things for audience benefit. You spoke about a team, and I agree with you, team is very important. So tell me, do you have to be from IIT, IIM to get funding?
No. We don't look at the pedigree of the team, but we need to know in terms of, if it's a revolutionary idea in terms of if it's a revolutionary idea. Normally, if the team members comes from a well-known institute, your chance of, as a VC or a private equity, we say, okay, the risk is much lower, but it's not a kind of a thing that you need to come from a good institute, or you may be a person who have worked in that industry. You know the pain point in that industry. And what you're doing with your venture is trying to solve that pain point.
So you're right. I mean, you don't have to be necessarily the blue chip academic track record. Though I must confess that early stage funding, people do have a bias towards that qualification. But let that not be, something which deters you. The other thing you spoke about is business plan, right? And very often I've noticed people come with ideas and concepts, and I'm not even sure they're fully baked and thought through. Like you spoke about scale, relevance, competition. Is there stuff you want to share as to the 3-4 most important things they should look at while they're looking at the business plan, which will help them to think through that, yes, this business makes commercial sense?
Yeah, the most important point is the product and services, what you're trying to kind of deliver to the market. I mean, that's a key point. I mean, if it's a kind of it's a common product or services, and there is no differentiating factor, I mean, as an investor, why would I be interested? I mean, there are n number of service providers or companies that are providing that product. But are you solving a pain point within that industry? That's most important. Within an industry, if I'm solving a pain point, then you had the attention of the venture capital. That means there is a kind of issue that is unsorted within the industry that need to be figured in, that need to be tackled. And obviously there would be a kind of a customer who would be willing to pay a premium to that product or services. So in terms of answering your question, it's more of in terms of, trying to address the market. I mean, what are you trying to address, right?
Right.
And when I talked about scalability, if I'm not kind of providing a services that is very unique or that has an innovation, that doesn't have an innovation, then obviously the scalability would be under question.
So Saji is making some interesting points. He's saying that it's important that in your business plan, your business idea should have some differentiation, i.e., there should be some problem you're solving, some pain point you're addressing. A Me Too business idea, frankly, you'll find it tough to get funded by either an angel or a VC. So, if you come up with an idea which is just another among the 100 ideas and come back and say, I can do it better, I would doubt if you'll get money. So, you need to be realistic about it. Second point Saji mentioned was, the market in which you are trying to do this business, i.e. scalability, right? It's important that every business you do is not so niche that there's no market to it. That means there has to be growth potential. There has to be, luckily in India, a large country, lots of domestic consumption stories, but if you go and end up doing, by way of an example, I'm going to make and sell, for lack of a better example, Montblanc pens, it's only limited to so many people, and so many people can afford to buy it, right, or the equivalent, and therefore the market is not large, although profitable. So you have to be careful as to, selection of business, the scalability angle, right? One more point I want to touch upon, Saji, for the benefit of audience is how much money should an entrepreneur seek? That's always a contention with them at the early stage. Frankly, the Excel sheets prepared mean nothing, and they are always wondering at what stage should reach how much money, and I'm talking the early stage right now. Any early suggestions?
In terms of the capital requirement, I think whatever is your requirement for the first stage of growth, you should seek that. The second point you need to understand is whenever you seek a capital from a venture capital, you're basically diluting your equity. And so it's basically depend upon the valuation that you can get from the venture capital. And to what extent you are comfortable in kind of diluting your equity stake. Because to a large extent, if you dilute too much, then it would be difficult in attracting more capital going forward, because then your headroom for the stake dilution would be like limited. But even a kind of undercapitalizing your venture also will not help. I think then probably you'll have to kind of be a balance between the capital requirement and the dilution that you're willing to kind of give out.
So I think another very important learning over here, ladies and gentlemen, that please, whatever your requirement is, I would urge you to try and get more. We all are entrepreneurs. We all are trying new things. I can tell you, whatever money you estimate, you'll always fall short. It's the gospel truth of business, right? And therefore, if you can, try and get a bit more because that'll come handy. And the second important learning is valuation. I would think that early stage businesses, valuation should not be the driver. Get the money, that's more important. If a business is good, valuation follow suit. I'm not saying that means sell for nothing. You should make your best attempt to see whatever you can get, but that should not precede capital needs. Your capital requirement should precede valuation. And that's the mistake most entrepreneurs make, that they get so valued in their own idea and thinking that they believe the business is worth much more than somebody's offering them. They don't raise capital, and that often is the reason where I would say 50% of businesses die, which is the worst thing that can happen for all the effort put inside. Saji, that was helpful. Thank you. If I may take this next conversation to Dr. Chauhan. Dr. Chauhan, we're going to make it a little, interesting. You spoke and explained the BSc SME platform very well, and the benefit of doing that platform. And I totally agree with you that that platform is actually such an interesting avenue for people to raise money. Could you share some real experiences, without naming the company if you want, on what are the challenges people have faced in the recent past as people raise money on your platform in certain sectors? And could you also throw some light on what has been the nature of companies and sectors where people came to the BSc SME platform?
I mean, the challenges are basically about being disciplined, that you need to create a prospectus when you go to a merchant banker. You basically, they ask you a lot of questions. They have to prepare a business plan. Like you go to venture capitalist, you go to a private equity, or you go to anyone, angel investor. They ask you a lot of questions. Similarly, here you are raising funds from other people, and you need to give them a lot of details about your business, about kind of your turnover and profits and so on and so forth. And kind of huge amount of detail are required. So many people find it very tough to answer in a very coherent way. But over a period, that starts happening. And we have got people from different types of businesses listing. Large companies come usually from single areas, whenever they are in kind of vogue. But today we get doctors also listing on BSc, that is cosmetic surgeons who have 20, 30 sort of places, and those guys also are listing. Hosiery people are listing, biotech guys are listing, IT guys are listing, trading companies are listing. So there is no specific trend, but effectively it's the first time in India where the small entrepreneurs are able to come, list and create wealth for themselves. So I see a lot of action in practically even seed manufacturing, the agricultural seed manufacturers, they are also listing.
So I think one important learning, if you notice, a lot of the VCs and early stage tech was a big focus. The SME platform actually allows all kinds of businesses to list and raise money. And that's a big thing because, I would dare say that there'll be a substantive part of this audience which is non-technology oriented, right? Or technology is only a piece of the business. And therefore, what Dr. Chauhan says is actually should be music to our ears. One last question, sir. How will crowdfunding coexist with BSc SME platform?
The crowdfunding guidelines SEBI has just issued, and BSc will also have a crowdfunding platform. So anyone wanting to do crowdfunding also can come to BSc, make their presentations. BSc will allow them in different offices to come make presentations to the sort of angel funds and so on and so forth. And once that happens, the trading, because ultimately, even if you do funding, later on, the funder also wants to have an exit.
Right.
And so there is a kind of exit out of SME listing and then eventually main board listing. So BSE is actively working in the area of coming into crowdfunding as and when the SEBI regulations kind of are settled.
Is the platform to be launched soon enough, sir, or is there time away?
As soon as the SEBI regulations come in, because we work under specific regulatory framework.
Right.
So currently the SEBI regulations are under discussions. They have issued a discussion paper, as we say.
Right.
After getting all the feedback from everyone, they will issue final regulations. As soon as they issue final regulations, BSE will ensure within few days or a month, BSE will start having a crowdfunding platform. And BSE even now works with Mumbai Angels and others to present some of these crowdfunding initiatives. But I think it will be more organized going forward.
Right. Thank you, sir.